Hello, friends. This is a quick emergency update. First of all, sorry, my throat isn't well right now. But no matter where I am, I always try to keep you updated consistently. At the moment, the condition of the global markets and the cryptocurrency market is very bad. For Bitcoin, the situation looks even more serious because it has now lost the important support zone between $63,000 and $65,000. In simple words, Bitcoin has reached a very critical support area that we've been discussing for the last 3 to 5 months. I had already warned you in previous videos that the road ahead would not be easy. Unfortunately, I couldn't upload videos for the last few days because my health wasn't good and I was traveling as well. But if you check my older videos, I clearly said that the next 3 to 4 months could become difficult for the market. There was historical data supporting this, but more importantly, the global situation was also pointing toward major pressure on Bitcoin and the crypto market. Because of Bitcoin ETFs and the overall market conditions, Bitcoin has once again fallen below the $63,000 level, and now it even feels possible that it could drop further towards $60,000. So in this video, I'll explain what history tells us, what you should do right now, and why the market is reacting this way. Altcoins have also seen heavy corrections, but Bitcoin dominance falling shows that altcoins are not crashing as badly compared to Bitcoin. Still, I know many of you are sitting in losses, and I completely understand that. Before we continue, if you're new to the channel, make sure to subscribe. Don't leave without liking and sharing the video. Your support means a lot to me. Even during difficult times, I want you to know that I'll always stand with this community. As you can probably notice, I'm currently in a very cold place. I'm wearing warm clothes because temperatures here sometimes drop close to 1 degree Celsius. Right now, it's not even 7 a.m., and I woke up early just to make this video for you. That's how committed I am to keeping you informed. So don't panic. We were already talking about opportunities like this, and when they arrive, we should try to use them wisely. Now let's talk about what's happening globally. In the last couple of days, tensions between Iran and the United States have escalated again. The ceasefire situation is unstable. The U.S. launched attacks first, and then Iran reportedly responded by targeting U.S. military bases in Kuwait and Bahrain. Oil tankers are also being attacked. In short, global uncertainty has increased again, and because of that, the financial markets are under pressure. And honestly, trusting Donald Trump's statements has become very difficult because one day he says one thing and the next day he says something completely different. When I saw the disclosure data related to his trading activity, I was shocked. Around 3,700 trades were reportedly made under his name or by his team within 90 days. That's almost 40 trades per day on average. Most retail traders struggle to take even 1 or 2 trades daily. This clearly shows that the market is heavily controlled by powerful players. Until a proper peace deal is officially signed, we cannot take this situation lightly. The Strait of Hormuz issue is another major concern. Even if peace negotiations begin today, restoring normal operations could still take 5 to 6 months. And if conditions worsen further, we could see a serious energy crisis in the future. That's why global markets, including Bitcoin and crypto, are reacting negatively. Another very important factor directly affecting Bitcoin is the ETF market. Bitcoin ETFs have now broken historical records for negative inflows. For the last 12 consecutive days, ETFs have seen heavy outflows. Major institutions like BlackRock and Fidelity have been continuously selling Bitcoin. Reports show thousands of Bitcoin being sold daily. This has created fear in the market because just recently, when Bitcoin moved from $65,000 toward $80,000 to $85,000, ETFs were aggressively buying. That created positive sentiment. But now, they're doing the exact opposite, continuous selling. This proves that these institutions are not emotionally attached to the market. They simply follow profit and strategy. Technically, Bitcoin was trading inside an important channel, and that channel repeatedly acted as resistance. I kept trying to explain this in previous videos. Around $80,000 to $85,000, Bitcoin faced rejection, especially because mining costs and major technical resistance levels were sitting there. Once Bitcoin lost the support of that channel, we saw a sharp crash. Now Bitcoin is again testing the critical $63,000 to $65,000 support zone. If daily, weekly, or especially monthly candles close below this area, then we need to take the situation more seriously. The important levels I'm watching are the 200-week moving average and the 50-month moving average, which are currently around $59,000 to $62,000. These are major support zones. If Bitcoin stabilizes there, it could become a good long-term entry point. But if those levels fail, then historically, Bitcoin could even drop below $50,000. I had already shared historical data with you before. Historically, during May, June, July, and August, Bitcoin has often corrected by 50 to 70% after halving cycles. Many people didn't believe it back then, but history has repeated itself several times. For example, 2016 halving to 2017 all-time high to 2018 bottom. 2020 halving to 2021 all-time high to 2022 bottom. 2024 halving to 2025 all-time high to, and now in 2026, we are potentially seeing another major bottom formation. That's why we need to remain careful. For Ethereum, the situation is similar. Ethereum is currently sitting near an important support zone around $1,700 to $1,800. If it fails to hold, then even $1,500 becomes possible. Solana has also dropped heavily. If it moves near the $65 zone, that could become an interesting level to watch for long-term investors. One important thing to understand is that coins with strong narratives and momentum are still holding relatively well. The coins getting destroyed are mostly weak projects that simply follow Bitcoin and Ethereum without having any real momentum or utility. So my advice is simple. Don't chase pumps right now. If panic increases further and Bitcoin starts forming a proper base, then you may get much better buying opportunities. I'm continuously trying to keep you updated through Instagram, shorts, and videos, no matter where I am or how my health is. So keep supporting the channel. And remember, don't panic. These crashes should be viewed as opportunities, but only take as much risk as you can handle. I always say crypto exposure should ideally remain around 5 to 10% of your total portfolio. And even within crypto, 50% should be Bitcoin, 25% Ethereum. The rest can be selected altcoins. That way, even if conditions become worse, you can still manage the situation. The days of becoming rich overnight are mostly gone. Crypto has now become more like a traditional financial market, especially after ETFs entered the game. Big institutions now control a large part of market movement. When they want to sell, the market crashes. When they want to buy, the market pumps. So we also need to adjust our strategies accordingly. That's all for now. If you enjoyed the video, don't forget to like, share, and subscribe. Follow us on Twitter and Telegram as well. Links are in the description. Until next time, stay happy, keep smiling, and keep earning. Your friend Shabeen. Thank you. Goodbye.